I've always said that the real estate matters first. After that, it's where the providers are going to come from, and the thesis there is the supply of medical space in Beverly Hills was very, very limited. 14 or so years, we've had very accommodating monetary policy that has led to essentially cheap money in the market for a long time. Very recently, since the beginning of 2022, the Fed started hiking interest rates.
This is Maestro Minute, the show that discusses all things real estate, sharing interviews with the most successful people in the industry. Hear from their perspective and what they are doing to achieve success. Get exclusive tips on how you can also succeed in real estate. Maestro Minute is brought to you by Maestro Development. Here's your host, Nareg-Mouradian.
What would you say is the uniqueness or the specialty in healthcare when you're doing development? What are the things you look at or look for, for healthcare?
It depends on a lot, right? Some of it is market specific. There's ways to play in and around the sector. I've always said that the real estate matters first. After that, it's where the providers are going to come from, but if you have well-located real estate, it'll prove as a defensive investment positioning relative to other components of the real estate. But as you think about like healthcare development in particular, a lot of that is just driven by user demand. Yeah. Frankly, you're at the front of that in a lot of ways. Like you see the user demand requirements because they're coming to you well in advance of even kicking off either tenant improvements, which are the interior fit outs within the buildings, or shell and core new development construction for those providers.
What kind of products do you see in healthcare development right now that you guys are working on or you think are in demand?
So we've been focused predominantly on more acquisition and less development, though we have been working through the city of LA, in fact, on a very large medical office building that we just recently got entitled. It's a 145,000 square foot medical office building that'll be at the corner of San Vicente and Wilshire, just over the city line of Beverly Hills.
Is that Big Five location?
Correct. Yeah, it's presently a Big Five sporting goods store right now. The thesis there is the supply of medical space in Beverly Hills was very, very limited. And not only was it limited, but it was also at one point restricted. In 2011, for instance, the city put a moratorium on the delivery of medical office space. So it prevented you from actually converting or delivering any new medical space into that market. And what you would have expected that to have happened took place, which is the vacancies plummeted, that you had sub 3% vacancy at certain points, and the cost of that space skyrocketed because anyone who needed to provide medical care inside Beverly Hills had to pay a pretty penny for it.
So you talked a little bit about accessing and doing acquisitions. And what is it like for capital? Seems like it's hard to get capital these days with the market.
Yeah.
What's your experience with that? Like, what do you see out there for that?
14 or so years, we've had very accommodating monetary policy that has led to essentially cheap money in the market for a long time. Very recently, since the beginning of 2022, the Fed started hiking interest rates, and that has essentially led to capital becoming increasingly expensive. All that's to say that return expectations need to moderate to catch up with that. There is absolutely scarcity in the market, but I will tell you there is still a lot of pent-up demand for the sector, and so I think that there's plenty of capital to invest in real estate, but right now, especially in healthcare real estate, it needs to be the right real estate, and it's a risk-off environment. So I think there's an opportunity now to deploy capital into what I'd call choice assets, where you see like a flight to quality, and you're going to see that on the investment side. There is no shortage of capital for de-risked projects, but there's absolutely limited appetite, if none at all, for anything that's a little bit riskier, which would be something like speculative development where you're going to build a building that doesn't have any pre-lease, or an office to medical conversion without a very strong either pre-lease tenant in tow, meaning that you're bringing a tenant use requirement to put into the building when you buy it. Just knowing that you're building into a market like that Beverly Hills market before they recently lifted the moratorium, where the vacancy was sub 3%. That's a market where you could potentially feel confident knowing that you'll get the provider demand there.
There's a huge focus on office conversion to residential. I know there was healthcare conversion as well. Do you see that still being a strong suit in the market?
I think there will be opportunities for that. I think right now construction costs are playing a major role in a lot of what is and is not feasible, especially out here. On the West Coast, I think we've just been dealing with elevated construction pricing for so long that our lens gets a little skewed. And so when we look out at other markets and we hear tenant improvement figures, they're substantially lower than what we see here, but they're still elevated relative to where I would say their norms were 10 to 12 years ago. And I think some of that is driven by the fact that there is a steady supply of medical inventory being delivered every year.
What other markets do you see growing outside of the California area?
We're, as a firm, targeting and following a lot of secondary city migration, where the major gateway cities such as Los Angeles, San Francisco, New York, Chicago, they've become very expensive, and folks have left to go find the creature comforts that are offered in a major city, but like at a lower cost point. And so we're seeing the benefactors being Tampa, Atlanta, Nashville, Charlotte, Austin, Phoenix. And we've been following that migration. Our firm has historically been west-southwest focused. And, today now we're looking nationally. And so we're following a lot of the Sunbelt migration, and we're following low-cost environments where a lot of retirees are looking to live, that, when they have fixed income, having a lower cost is just simply, a prudent choice.
What's your strategy on acquisition? What do you do to kind of compete? There's so many different, healthcare developers out there that are looking for that right deal, that right location, right, that right product. What is it specifically that you think makes you guys, or you, successful in that world, as far as looking for acquisitions, like your relationships with brokers, or what is it that gets you think, those good opportunities?
Some of it, I will say, is having the confidence to know what happens after you close. Underwriting a deal, I don't want to say it's like a commodity, but you can teach someone enough about the sector in a short period of time so that they can become dangerous. And I mean that in terms of like competitive, but really understanding how to work the relationships with the healthcare systems, how to run the assets, and having that be a seamless interaction and a consistent flow of communication from the top down to the boots on the ground, I think is essential. And that's a differentiator. The reality is capital is capital. And at some point, I don't want to say it reaches parity, but it's really the differentiator becomes who the providers want to work with. And you see that in a lot of development groups. In fact, one of my prior employers, Pacific Medical Buildings, they had a statistic at one point, and I believe it, that it was something like 85 or 90+% of their business was repeat clients. And that is a huge figure, and that should tell you that success is something that's reinforced with how you handle your clients, and not necessarily just about cost. I think when you take that same philosophy about treating your clients right, and this goes across all businesses, then you're just opening yourself up for more opportunities, both with that client as well as their collaborators and competitors.
Thanks for tuning in to the Maestro Minute podcast. Make sure to rate this podcast if you found it helpful, share it with a friend that could use it, and follow us on all major podcast platforms. The Maestro Minute, powered by Maestro Development.